Everyone's waiting for the US to invade Cuba. That's a distraction. The trade already started in a battery metal, a sanction clause, and a choke point 2 refineries wide. Here's who wins, exactly when to move, and the level where you run. First, kill the bad assumption. You don't need an invasion. On May 1st, the US signed an Executive Order 14404 built on emergency economic powers, not the old Cuba law. It lets Washington sanction anyone in any country who touches Cuban metals. China already refines about 90% of the world's cobalt sulfate. There are essentially 2 refineries outside China. The squeeze is already live. The attack is theater. The supply chain is the trade. Cuba sits on top 5 nickel and top 4 cobalt reserves. Nickel's a dead leg. The world's drowning in Indonesian nickel. Cobalt is the opposite. Congo capped exports, the market's in deficit, and pulling Cuba's tons makes a tight market tighter. Cobalt is the trade, everything else is a story. 2 groups can't get supply, and they can't escape the way the battery makers can switch chemistry to cobalt free. Except the only US LFP plant just got cancelled. The escape hatch is jammed. Aerospace is worse off, jet engine superalloys need cobalt, and you can't requalify an engine in a hurry. History is clear on this. In the 1978 cobalt crisis, superalloy demand actually rose 80%. They can't pivot, they pay. So who jumps in? This is analysis, not advice. Do your own research. The trade, high-octane, Canadian-listed Electra, ticker ELBM, North America's cobalt sulfate choke point, and LG Energy already locked 60% of its output. Talon, TLO, the only operating nickel mine, plus Rio Tinto, a $114 million federal grant. Fortune Minerals, FT, the microcap, is the lottery ticket. The durable one in the New York Stock Exchange quality is Carpenter Technology, CRS, and ATI, superalloy makers already posting price power because of their rivals not being able to get metals. The trap, say it out loud. Sherritt, the obvious Cuba stock, is a seized trade pending value sinkhole, and there is no clean New York Stock Exchange cobalt pure play. Anyone who tells you there is selling you something. Now the question everyone asks, buy before or after the attack? Wrong frame, the money moves before the headlines every single time. A senator on the Armed Services Committee bought defense and oil 5 days before the Venezuelan strike. Sanctioned metal spikes round trip 80% in 6 weeks on rumors before anything's official. So the entry isn't a future invasion that may never come, it's the catalyst. China, that's already running a court date on May 19th, a refinery starving by mid-June, the first congressional disclosure window in July. You position into those, not into a war. Selling is where everyone blows it. The history is brutal and consistent. Every one of these substitute trades round-tripped, meaning they go up and they go back down. If you don't sell, you'll end up not profiting. Moly Corp went 5x and then bankrupted. Linus down 90 to 80%. The stocks peak before the metal does. So this is where it's an 8 to 12 month trade, not a buy and hold. Sell into strength while cobalt's still rising, exit hard, same day on any Cuba sanctions relief rumors. The only thing that upgrades it into a hold is a US government price floor. That way MP Materials got one, and that Carpenter and ATI. Different clock, they don't round trip on 8 months because their customers can't engineer cobalt for years. Key levels, I'm not going to insult you with fake numbers on a war that hasn't happened. Here's the real method. You set your line off the live price of the day you act, anchor to the trigger, calendar, stop goes below the pre-catalyst base, scale out into the spike, not after it, and a hard stop the second a carve-out leaks. The dates are your levels. May 19, mid-June, July, and any defense contract or place floor headline. Numbers without those dates are just noise. Bottom line, cobalt is not crude. The choke point, not the obvious stock. A trade with a stopwatch and a doors rumor, not the war. This is research, sourced, and lagged, not financial advice. The names are speculative. Do your own research, size it small, and don't marry it. That's the whole game. Good luck, everybody.